Hello guys, welcome back to my YouTube channel. In today's video, I just want to show you guys some simple stuff that you can actually use to trade GBP/USD and gold and grow your small accounts from like $10 to $100, $50 to $250 and so on and so forth using this strategy because it comes with a small stop loss, okay, but with a greater risk to reward ratio. So don't forget to hit the like button and subscribe to this YouTube channel. And also follow us on the Telegram channel if you like this kind of content that I post. So without wasting much of your time, let's just go straight up to it so that we can make this video as short as possible while delivering good and quality information to you. So we're going to be using GBP/USD and gold, all right? So now let's begin, all right? So someone said I should not be actually using the lines, okay? So first and foremost, you have to actually identify the trend of the market, okay? So right here, let's go to the daily, all right? We're going to go to the daily time frame, all right? So from the daily, what we do on the daily is to actually identify the trend of the market. So right here, from the daily time frame, we can see that this market is what in an uptrend, okay? And what happened? Right now we are in a downtrend because this particular low where the market ranged for a while has actually been broken down out. The market has actually broken out from that low. So therefore we should be expecting some downward movement. So what we should expect is something like this for the next couple of days. All right, it might not be exactly as perfect as this, but what I'm just trying to say is that we should expect a downtrend. Okay, so now let's assume that all right, the market was in an uptrend phase while the market is in an uptrend phase, all right, which we have already established that from here. So you're going to be looking for buys. All right, so you look for key levels. All right, so now you go to a smaller time frame. Your goal is to go to the smaller time frame. We can actually look at this in numerous times. Okay, so now the goal is to go to the smaller time frame, like the 1 hour. You can use the 4 hours, whichever one you like to use. So now let's scale down from the 4 hours from the daily to the 4 hours. All right, we are just trying to establish some kind of relationship here. All right, from the daily time frame now down to the 4 hours, we are looking for potential buy opportunities, okay, using this set strategy which I've already been given to you guys. So now we are on the 4 hours time frame. All right, so now we are going to use two particular type of strategy here. One is to identify our key level, and then the second strategy is to identify where the market is actually ready to move. Okay, so now we have what? A sweep of what? Liquidity right here. So right here we have our sweep of what? Liquidity sweep. All right, so now since we have our liquidity sweep, we're looking for possible break of structures to the upside. So right here we have a structural break. We have a break of structure to the upside. All right, the next thing we're going to be looking for is a pullback. Okay, so we're going to label this to be a break of structure, okay, because already the market is what? In an uptrend, because we have already established that. I call it a shift in market structure. So we're going to call it a break of market structure because we have already established the trend, all right, of this market. So the next thing we wait for is a pullback that is at least 50% of this move. Okay, sorry about that. We need a pullback that's at least 50% from the swing low to the swing high. So this move is exactly what? 50%. This gives us even up to 60%. So that becomes what? Our structural liquidity. All right, so this becomes what? My structural liquidity. So I mark this to be my structural liquidity. The next thing I want is for the market. The next thing I want is for the market to actually pull back. Okay, the next thing I want is for the market to give me a second break of structure that actually validates my setup. Okay, so we have our second break of structure, which is there. So now I'm going to go down to the 1 hour time frame to try to see where to actually mark my POI from. POI stands for my point of interest. Okay, where will I want to be buying this market from? So right here, I can see that there's another liquidity point which the market still has to take out, okay, before I can actually decide to buy. Okay, so now I'm just going to go ahead and mark out that liquidity point is here. All right, so we have this, and the liquidity points come aligns with what another block right there. So we have that liquidity point. The market has to, before this market will move, market has to take this liquidity area. Okay, so now I go ahead and mark my protected low, and I'm going to go ahead and mark my area of interest. Okay, my POI. So my POI becomes very small. My trade is now narrowed from there. That is, rather than trying to buy from that zone, I'm trying to buy from this particular zone right here. So you see, now what happened? The market taps into the zone, all right? And let's say you buy from here. You buy from here. What happens? Your stop loss is just below here. Sorry, that is too far, or that's too enormous. All right, your stop loss is just below here, 16 pips. All right, while you target 140 something pips. Okay, so now let's look at other scenarios, which in case you miss that particular move from the low there, there are other scenarios which you can actually use to actually enter this set trade. Okay, if you've missed that particular move. All right, so now we're just going to look at this particular area right here. Okay, so we're going to look at this particular area right here. Already we have identified that. Okay, so now within this particular smaller move, you can actually identify that, okay, this is a shift in market structure. All right, so whatever I should be looking for, or you can actually identify this area below here as a shift in market structure. All right, so there's a shift in market structure. So we're just going to go to the 5 minutes time frame and just try to pick entries from there. All right, we're going to do that for 2 good setups, because one is because the high, okay, have not been broken. The high has not been broken. All right, the market has not broken the high, so that's why we're going to keep doing that until the market takes out what that particular high. All right, so the market takes out the high. So now let's wait for the market to actually load. It's taking a while. It's taking a while. So now let's do this. All right. This is actually interesting because for me, I find it to be fun. All right. The market is loading. It's loading. It's loading. It's loading. All right. From the moment it entered here. All right. We're just gonna go ahead and mark out some things. Okay. It's just loading and it's taking a bit time than I actually thought. As those up to the number of bars that are allowed to load. Okay, thank God. All right, so right here, like I said, we have a shift in market structure. Okay, so and here again, here we have a sweep of liquidity, and then we have a break of structure right here. So we have a break of structure, all right, or we call this a market structure shift, because let it align with the other strategy which I gave to you guys today. Let's call this a market structure shift, and let's call this our break of structure. Okay, so this is our break of structure. All right, so this is a market structure shift within this smaller time frame. When you're using the smaller time frames, you should be able to know how to place the themes. All right, so now the next thing we're going to do is to mark out our breaker block. Okay, our breaker block is what a failed order block. Okay, this is a bearish order block right here. So right here, we're just going to go ahead and mark that. And remember, taking this trade, I will insert a photo right here, so that, because you need confirmation to actually enter this trade. So you see, you just, with a very small stop loss, okay, you could have just entered that trade with just some few pips. With a 3 pip stop loss, guys, you So I've just made about a 450 pips quick trade. Okay, that's a very quick trade. And here again we have remember, let's go back to our 4 hours time frame. Okay, the market has not actually taken out this particular high, so you're still free to take as much buy as possible until this high is what being taken out. Okay, you're still free to still take as much buy as possible until that high is being taken out. So the goal is to target that high. Since the high has not been taken out, you still have more opportunities to look for buys. All right, so that's the approach for this particular strategy. So now let's look at another example right here. Okay, so now let's say the market came down a bit. Okay, so now we can see that, okay, there's a break of this area right here. All right, there's a break of this area, and then there's a market structure shift right here. Okay, so since there's a break of that area and there's a market structure shift, what does that leave us with? All right, we look for another opportunity. Let's target that market structure shift. Okay, so we tag that a market structure shift, and then we look for a break of market structure to the upside. Okay, so now we have this area right here. Did the market close above? Yeah, so we have that to be our break of market structure. Okay, so we have that to be our break of market structure. All right, the next thing we look for is our breaker block. Okay, we have our breaker block right here to this other block, so we're going to use the other block, okay, right there. All right, so the next thing we want is for the market to sweep out this low, and it must sweep out this low and tap and go right into that breaker block or other block. Okay, so we call that liquid inducement. Let's call this level in the inducement zone. So what happened? All right, you don't fall pre for this market, you just wait for it to tap into your key level. All right, once it does that, what happened? You can actually go for your longs. All right, your long, okay, you can go for your long, and then you target the highs. Okay, you can go for your longs and then you target the highs. All right, so sorry about that. So right here, let's just see what is happening here. So right here, you can see that area. So that's a clean 100 pips. Okay, so always this is like a 5 pip stop loss. The other one was just a 3 pip stop loss. So guys, you can use this particular method to actually do your small account. Mind you, you need confirmation before you can actually take your trades. Okay, you need confirmation. Let's say you entered with one lot with a $50, you would have been able to make $1,000 using this particular trading strategy and setup. So this actually makes a lot of sense. So you have to practice. You can look for both buys and sell, but I advise you to actually stick for buys. Why? Because you've made your analysis and it aligns with what buy. So if you're a swinger, you can actually take your trades from here, and then while you wait for your TP, all right? So but if you are a scalper, you can actually use this particular strategy and actually be catching some good moves, okay, within while the other nigga is just waiting. So this strategy covers anybody, you understand, both a swing trader and an intraday trader. So now let's look at another example on gold. I think this was last week. The market has been a bit messy because of the trade war going on between China and the US. All right, so the market has actually been a bit messy. Okay, so right here, I'm just going to break something down for you guys to show you this particular trading setup which I picked on last week. Okay, so last week, that was Friday, yeah, before the NFP. All right, so I was actually just trying to see if I could see a trade before the NFP. So now let's look at the daily time frame. From the daily time frame, let's look at what exactly I was actually looking for. Okay, sorry, I think that was on the 4 hours, not the daily. Okay, so I think I have to go to the 1 hour. Sorry guys, I just need to be certain about what I'm showing you guys. All right, so we're just going to zoom a little bit to the left here. Okay, so I can see a breaker block. Okay, because I can see another block here that failed, so I'm just going to mark that and drag it on. Okay, I'm just going to mark that and drag it on. All right, so I was actually let me see if I go to 30 minutes time frame and see. All right, so let me see. I just need to be certain, fam. I just need to be certain, so that gives something accurate. Okay. All right, so I'll stick with what I have on the 1 hour. Okay, so I was actually waiting for the market to actually tap into this area, because here we have our breaker block right there. Okay, we have our breaker block. All right, and we have our inducement. We have our breaker block right there, and we have what, our inducement area right here. Okay, so I was just waiting for the market to actually tap into that area. This is our inducement area. Okay, so I was waiting for the market to actually tap into that area. So it did not. If it did, I think I would have taken a buy. So now let's go to the 15 minutes time frame to show you guys exactly what I waited for. Right, so I waited for the market to actually take out this high and take out this high. All right, let me go to the 5 minutes time frame. Okay, I'm waiting for the market to take out this particular high here. All right, and I remember sharing this setup with my VIP members. Okay, all right, so remember sharing this setup with my VIP members. Okay, so I remember waiting for the market to actually break out this from this high. All right, so then the market eventually did. Okay, so the market eventually took out this high. All right, so that means there is what, a temporal market structure shift. Okay, so that's our market structure shift on the smaller time frame. So, and I also wanted the market to, we have an inducement right here. Okay, we have an inducement area right here. So I'm just going to drag that to the left. Okay, so we have that inducement zone. Okay, so what I waited for, I wanted this market to actually come, then take that area. Okay, and then tap into this area right here. So the market did exactly the way I anticipated. Okay, just tapped into it. All right, so it gave me quite exactly the confirmation I needed. Okay, gave me exact same confirmation I needed, and it went exactly to my target. So this is just a simple approach to actually trade using this particular strategy. We have a market structure shift, we have a sweep there, we have a market structure shift, and we have a break of structure there. We have a pullback and a break of structure. That pullback is our inducement. Okay, we have a break of structure right there. Okay, we have a break of structure right there. We have our inducement. So what happened? We wait for the market to actually come, tap into, sweep the liquidity resting at this area right here. It has to sweep the liquidity resting at that area. So as soon as the market did that, what happened? We're just waiting for it to give us our confirmation. Okay, so it was the NFP, remember guys, so that was my target. So you see, just as smooth as that is. Okay, stop losses just about 4 pips for $40. Okay, let's say you're using a 0.1, you would have just gotten a $500 risking just $50. So this is a very simple strategy which I use for gold with simple execution. Okay, whenever I'm in doubt, I wait for confirmation on the lower time frame. Okay, or I wait for a market shift in structure. Don't forget, we offer mentorship and we also have signal group. If you like my videos and you love to continue to watch contents like this, don't forget to hit the like button and subscribe to this YouTube channel. Stay blessed.